Okay, recording now. Okay, so we just started recording. I did kind of go through this first part without recording, and I just realized we aren't recording. So I'm going to quickly go over what I just said. So we just said, what is tape reading? Reading tape refers to interpreting the time in sales, as well as the level 2 data, which can help in conjunction with support and resistance zones make you a better trader. It can help traders to time breakouts, breakdowns, and larger price movements right before they play out. And this isn't something that I can give you some instructions on and you can get good at right away. It's something that's going to require screen time for you. You're going to have to stare at tape for months, years as you trade and be able to spot these patterns right as they happen. You have to act quick, and this will add confidence to the trade that you're doing. It can help you get an idea of market sentiment by observing how other traders are reacting to a certain price, and you'll be able to spot things like, is this panic selling? Is this buying where buying pressure is building up, which will give you more confidence to buy also? Or is this price absorption at a certain level where this is giving me a hint that this level is about to break? I should not try to play a bounce here. Okay, that was a quick summary of what I'd already said. So moving on, level 2, this is the first aspect of reading tape that you need to understand. With level 2, you can examine open bids and asks at different price levels. So these orders on the level 2s are called passive orders, or more commonly known as limit orders. So they're not filled, they're just sitting on the book waiting to be filled by market orders. So you can use this to identify support and resistance levels. Large buy and sell orders are what you look for on the book. Those are what are usually going to mark levels that might coincide with support and resistance zones that you've already drawn. So these limit orders, they add liquidity to the market because these orders are just sitting on the book waiting to be filled. So they're adding liquidity to the market. And this liquidity can directly be seen via orders on the level 2, which your broker will normally provide. Although going forward, I'm gonna go over why I don't use the broker provided level 2 anymore. But I'll still go over what it is. So on Thinkorswim, you're gonna see something like this. And basically on this leftmost column is the exchange that is routing the order, the limit order that's been placed. The second column you see are the limit buy orders. That's the bid. So this is the price a buyer is willing to pay for the stock. On the third column, you're going to see the bid size. This is the amount of shares that the buyer wants to buy at this certain price. And you have to multiply this by 100 for my broker, at least. I think most of them, it's the same thing. So this is 1,100 shares that this guy wants to buy at 384.94. And the opposite is true for this right side. These are asks. So they're limit sell orders. This is the price a seller is willing to sell the stock for. And then same thing, last column is the ask size. This is the amount of shares the seller wants to sell. You have to multiply this again by 100. So this guy is willing to sell 1,100 shares at 384.95. Make sense? Any questions so far?
Those shares are the accumulation of all the people that are willing to sell at that price, right? It's not just one individual like hedge fund or whatever it is.
Wait, sorry, can you repeat that?
So those 1,100 shares are accumulation of a bunch of people, not just hedge funds or
It
like
can be, or it can be a single order too.
Okay.
Yeah.
That's what I was wondering. Okay, thank you.
Yeah. And there's the whole different topic to cover that, like with iceberg orders. We can talk about that in the future, but for general purposes, this can be multiple orders or a single order. Okay.
I had one quick question. Does this show you all the orders, like dealer market makers?
No, they don't. So it doesn't, and we're gonna go over that in a second. There's hidden orders that you won't see on here. This is just what's sitting on the book, and there are orders that can go from behind the book. These are not all the active orders. Oh, there's one more question. Do you look at SPY or ES for level 2? I look at ES, and we're gonna go over why. So just to kind of give you a hint of where I'm heading, I don't use this. this thing I'm going over, I don't use this in Thinkorswim. I just want you to understand what it is, and it helps you understand the basics behind, because we're going to go over Bookmap. That's what I use. That's a visual representation of this. It's much easier to understand, easier to like see and incorporate into your trading. So yeah, that's what this next slide is about. Nowadays, in my opinion, the level 2 provided by most brokers, it's outdated. So level 2, this originated in a while ago, and it used to be utilized a lot. It's just become outdated since the introduction of Bookmap, which is kind of a visualized form of the level 2. So this visual representation by Bookmap of the order book is provided via this heat map. It allows traders to view market liquidity, order flow, and price movement on a chart instead of by interpreting these lines of data. So here you have these lines of data. It's just very, you can use it, but in my opinion, I would switch over to Bookmap. It's just much easier to use. So what's Bookmap? So Bookmap, I'm just going to read this because this summarizes it very well. So you can see real-time buying and selling pressures in the market, which allows you to see liquidity levels and areas where significant trading activity is happening. Bookmap visualizes these buys and sells in the market using color-coded bubbles. The size of the bubble determines the activity and amount of volume of the security that was traded. So the green bubbles show that there were more market buys than market sells at that specific time frame, and the red bubbles show that there were more market sells than market buys. So in this picture, oops, you see these two circled bubbles. That green bubble shows that there were a large amount of buys that happened here, and this red bubble shows there's a little bit less sells, less total volume, but more sells that happened in this time frame. And you see, we're going to go over what these lines you see above. You see, we kind of rejected this line above. We're going to go over what that means. So another very useful feature of Bookmap is the ability to identify areas with high liquidity, which may influence price movements. So that's what these lines are. These are the orders sitting on the book. So the thing you're seeing here, these orders, it's much easier to understand by just looking at this chart and seeing the orders actually sitting there. And you can see the exact size of the orders on the right side. So these higher liquidity areas are color coded on a spectrum of black to yellow to orange to red. Red meaning it's the highest liquidity areas, it's the biggest orders, and black being the lowest. Black kind of is like air. There's barely any orders, and price will tend to kind of just float through those areas. The red, these have volume passive order areas. So yeah, these are passive orders. You will see the exact size of the order sitting at that specific price level. Understand? Any questions? Okay, moving on. So we're going to move on to, so I'll probably do a whole other class on Bookmap, just because although this is all we're using Bookmap for here, this basically this visual representation of level 2, there's other very nice features on Bookmap that I do use, such as iceberg orders, being able to spot those. So we'll have a whole separate class where we can just talk about Bookmap and how to kind of set it up for you and what things to look for in there. But for the purpose of this class, all we're looking for are these the liquidity areas and the size of these bubbles, which kind of show the amount of volume being traded at that specific time frame. So the next, so the lines, sorry, there's a question. So the lines are the orders that are not triggered. Yeah, so those are limit orders, aka passive orders, just sitting on the book. They have not been filled yet. They're waiting for a market order to hit them, and then they get. The bubbles show the history, but lines are the asks and bids. Yeah, so the bubbles are the previous bubbles you see are they're like the candles, the previous candles, and the size of that bubble is the amount of volume that happened during that candle. And the lines are the asks and bids. Yes, the lines are the asks and bids, so they're the orders sitting on the book. That's correct. Time and sales. That's the next. That's the next aspect of reading tape that needs to be understood. So the time and sales are going to show the completed orders that have been filled. So it shows when a market order hits a passive order being the limit order that was on the book, which you saw in the level 2. So the market orders remove liquidity from the market. So when you place a limit order, you're adding liquidity to the market and it's waiting to be filled. And once it is filled, that liquidity is removed from the market. Understand? So you're looking to buy from someone selling on the ask, or you're looking to sell to someone buying on the bid. Going back to here, one sec. My screen kind of glitched out. Okay, so you're looking to buy from someone selling on the ask, right? Sell orders. These are sell orders sitting on the ask, or you're looking to sell to someone buying on the bid. So someone's sitting on the bid, you're looking to sell to this person. This is a limit order. He's trying to sell, he's trying to buy a share, you're trying to sell to this guy. Make sense? Okay. So here's a picture of just a picture of time and how time and sales looks on Thinkorswim. So these are all market orders. You see the price that the order was filled at, you see the size, the amount of shares that were filled at that price. Now, you don't need to multiply this by 100. This is the actual amount. So this is not 5,000. This is 50. 50 shares were sold at 383.9. And then the time is irrelevant. It just shows the date, but these are going to be in chronological order. So you're going to see this like flushing down with new orders on top of each other, which is kind of going to show you the orders being filled. That's what it's showing you, like in the form of tape, because it used to literally be printed on these pieces of paper, which would come out, and then traders would analyze that quote unquote tape to see what the price was doing. That's how they saw where the price was. So this was how they traded before. They didn't have screens where they could see charts of the price moving around. They just had these long pieces of tape or paper where they would see where the price is at, and they could see the history of the price. And that's how they traded. That's how they decided what to do next. So some people argue that this has become very outdated. We don't need time and sales anymore. It's just something of the past. Now we have charts. We can just analyze price, just price action. And I disagree. Although price action is the most important thing, there are things inside tape or time and sales that you won't be able to see in price. And a lot of that has to do with the volume and the speed of the tape. You can identify some patterns which won't be revealed to you when just staring at price. Okay, on to the next. So we use these two components together to see if sellers are strong or buyers are strong. Tape reading should always be used in conjunction with some other form of technical analysis. In my case, that's the support and resistance zones that I use. And you can obviously have your own strategies. Some people like to use VWAP, EMAs, whatever you want to use. You should not rely solely on tape reading for your trading. Tape reading is something you add on to a strategy you have to strengthen that strategy. It's not a good idea to just trade off tape. It just leaves, it's just one, it's going to be very hard, and two, you're just leaving a lot of information on the table that you could otherwise have if you just had an actual TA-based trading system. Trying to read the tape while volume is low and the price is just running around is also useless. So that's why I trade in the mornings when volume is high, and in power hour when volume is high. My intraday trades aren't based on as heavily on tape. They're based on other aspects I look at. So almost 90% of my scalps will be during the morning because when the volume is low, the tape is not, it's going to be slow. It won't really give you many signals. The price usually won't be reacting to certain levels, which is what you kind of look for when you're reading tape. You're looking for the price to be at a level and seeing how the tape is reacting at that level, which is what we're going to go over. So level 2 can primarily be used to identify large walls and then seeing if those walls have confluence with your support resistance zones. So on Bookmap, when you looked at those color-coded levels, you're trying to see if these line up with zones you have. If they do, that's adding confluence to your own zone, to your trade. So if there's, for example, let's say if you had a zone that was between 445.5 and 446.5, you see that this is being confirmed by these orders that are sitting on the book. So that should add confidence to your zone. So you're thinking, okay, there's a good chance if we bounce off this, I'm going to play it. If we get a confirmation candle off the zone, I'm going to play it because I'll see that reaction on Bookmap also. So by walls, I mean huge orders sitting on the ask and bid that are likely to make the price move. So just as I said on Bookmap, those color-coded levels. With the I've already said this, we can visualize the orders now instead of staring at the built-in level 2. Bookmap provides a detailed view. Yep, I've been over this. It is actually a visual representation of level 2, correct. Any questions? Okay, these orders waiting to be filled. Yeah, we're gonna go over that. So wouldn't using a footprint software be better? Footprint's actual buys and sells. Yeah, you could use a footprint software. I don't have as much experience with it. I've always just used Bookmap, but you're right. I was going to go over this later, but let's just talk about it really quick. Some of these large orders that you see sitting on the book, they can be spoof orders. So a trader can essentially place a large order to try to drive price or trick people to come closer to that level, or that they can use it to trick people to sell their shares to that person. So they can place a fat order right here at 4446. And other traders might think, oh no, the price is about to bounce down. They start selling their shares and he's just buying them up because he knows the price is he wants the price to go up. He's buying those shares up at that price that he wants, and then he'll just take that order off the book. And guess what? The price will normally just shoot up after that. So you need to watch out for that. There's, like this Discord member said, you can use footprint software to get a better understanding of what's spoofed or what's not. I personally don't have as much experience with that, so I'm not going to pretend like I do. I will look into that too, and then we can talk about it. But right now, I haven't used footprint software. I just use Bookmap and my zones. Any other questions so far? Nope. Okay, moving on. I already talked about this. Okay, this is where I was supposed to talk about spoofed orders, which we just went over. Yeah, in this example, we see large orders highlighted by Bookmap acting as resistance. So buyers need to absorb these large sellers in order to get above these levels. Does that make sense? So the buyers here would need to wipe out all these sell orders to get above this level. And it's hard to do that. It's much easier to do that when the orders are smaller, which is where you see with these black and light blue lines. That's why that price can much more easily move through those levels. And here you can see we weren't able to accomplish that twice. And you can see the price rejected off that area. Okay, we're going to go over a quick example here. So this is the example we're going to go over. So here, what we see is ES approaching this 4548 level. And I need to pull this up on my other screen and then share that screen. Give me one moment. Okay, I see. Sorry. So this is not the one I'm going to pull up on my screen. This one, I just wanted to make a point. I'm just showing this via pictures. We're going to go through examples in a little bit, though. This one, I'm just showing an example of what we just talked about. Bookmap is confirming that there's large sells sitting at this 4548 price. And then I look at my I look at my zones, and I also see that I have a zone around that area. So what that's telling me is it's giving me confidence, like I should try to act off the zone if I see a rejection. So you can see there's a strong zone sitting right at this level. And then I would not rely solely on tape reading for trading this. Tape reading is adding confidence to my trade. So I just want to emphasize that point. I look at this first, my zone first, and then I notice this on Bookmap, and then I use these two together to take that trade, along with time and sales, which we'll go over in a little bit. Okay, so what other confluence from tape do we want to see to give us more confidence into these plays? So this is a good place for me to introduce time and sales into the mix. To play the bounces off zones or breakouts above key levels, or to play retests and bounces off zone breaks, you want to see heavy volume and fast tape roll in once the zone is tested and price begins reversing via our confirmation candle. So to reiterate, when you're seeing a bounce off a zone or a breakout above a key level, if you want to play that move, if you want to play that bounce off that zone or that breakout, you want to see a heavy volume and a fast tape start rolling in once that zone is tested. That's telling you, let's say you're playing the bounce, you see, and the price is going up. You want to see the price going down as tape speeds up and volume goes up. So that tells you that there's good confidence. There's more sellers jumping in to support this move down. And it's good confidence for you to also jump in and take that trade. So once you see that confirmation candle, you're going to look at your book map. Okay, it's rejecting that level. You're going to look at your time and sales, and you see the tape speeding up as the price turns down. That is your indication to go in and follow this trade down. So what does this fast tape mean? It indicates interest, participation, and increases the probability of that bounce, breakout, break, retest, bounce, whatever you're trying to play, whatever direction you're trying to play in, the move in that direction should be supported by fast tape. So all this must happen in conjunction with the level holding, which is why I say this must be used in confluence with support and resistance levels or zones. Using my zone strategy with this sort of tape confirmation has proven very successful for me. There was a time when I didn't look at tape at all and I just used zones, and I was profitable. I made good money, but my success rate went up much more once I incorporated looking at tape in conjunction with the zones. So this should add an edge. If you already have an edge, this will make your edge stronger. And this can be added to any form of TA, not just support resistance, however you like to trade. Just add this on and experiment with it. Any questions? No? Okay. Now I have an example. Okay, this is the example. Okay, so what do we see here? Based on my last class, we see Tesla entering this demand zone, right? So as you can see, these zones that I provide, and based on my zone strategy, what are we looking for now? We're looking for a trigger candle up, if you remember from the last class, right? And in the last class, that's all I said. So now on this class, we're looking for some other stuff on top of that. So let's pull up the example here. Give me 1 second. This is just a picture of the book map, and although on book map I can't go back in time, I found a recording of that day on YouTube for Tesla of book map. So we're going to see what happens on book map. So this is the first thing we're looking at besides the zone. So we're going to see what happens here. I'm going to switch my sharing to that screen. 1 sec. Okay. Switch over to Tesla. All right, so let's look at, so this is that recording. So like you remember from that picture I just showed you, Tesla is testing this 254-ish area, and on here you see the same thing. We have a zone in that area. So on the zone front, we're looking for a confirmation candle. On the book map front, we're looking for a confirmation of our zone, which we see buys here. Let's see what happens. Fast forward a little bit. What do we see? We see price starting to bounce up off that area. Let's keep watching. We just saw a pretty significant zone here getting taken out. That the orders sitting on the book that were right here, which we just saw, they got absorbed because of the bounce. This much more hefty level down here, which led to a bounce. For this, if we're looking at this from the zone point of view, well, we would be seeing the confirmation candle starting to build right here. And we're going to close looking at the zones, which we're going to go over in a second too. But from here, from the book map point of view, it's back in the zone. This is still in the zone. Look at, there's 31,000. There's a 31,000 size order sitting right here. Okay, we're definitely out of the zone, and at this point, that candle is likely about to close. Let's go switch back to here and see what happens. Okay. All right, so I accidentally skipped 2 candles, but this is the trigger candle if you remember from the last video, from the last class. This first green candle is where you would have entered. So now we've gone over 2 things that we look for. We have to go over 1 more, which is the tape reading, which is the time and sales. So just to go kind of review, because I want you guys to internalize this, we looked for the confirmation candle. In parallel, we're staring at this to make sure that there's a zone, there's heat level here, there's volume on the book here that will confirm our zone and lead to a bounce. So we've looked at 2 things in parallel. What is the tape, the time and sales doing as this price bounces off this level? So let me share that, because on Thinkorswim you can go back in time using on demand to kind of go over. So this is a little, so I've been messing with this and it's a little laggy. So what I've done here is I've frozen the time right after that candle closes to show what I saw on the tape, and then we're going to watch it live too. But first I want you to see what the tape looked like right when that candle closed. Let me share that 1 second. Okay, so this is that green candle that we saw on our trigger candle right when it closed. Let's see what happened during this candle. So I'm scrolling back in the tape around when that candle closed, which is around 255.59 and below, or that's around when it closed. So I want you to observe what the tape looks like now versus, let's go to that price. Okay, this is around when that candle was pushing up. Now, it's easy to, and I'm showing it to you and I'm scrolling back. You're gonna have to identify this as it happens. So when that candle was building up, the tape was moving faster and you were seeing bigger orders on the time and sales compared to before. And you saw that strength build up as that candle shot up and closed. Now that's very easy for me to say here with a frozen tape in front of me. You're gonna have to be able to identify this while it happens literally in seconds. It's gonna happen in front of your eyes. It's a pattern you're gonna have to notice time and time again and act on it. This is not something that you'll be able to just learn overnight, kind of like a bunch of rules that you can memorize and just kind of execute. This is an art almost. It requires skill. It's something I'm working on myself. I'm not great or perfect at it too. It's something that you get good at over time by identifying these patterns. So again, reiterating, as this candle built up, we're going to watch this live and it's going to be kind of glitchy and stuff, but that's why I want to go over this frozen view first, just so you guys can understand what we're looking for. As this candle was building up, this green candle was building up off the zone. We saw the book map level hold. We saw the zone hold. We saw the confirmation candle close. And we saw on the tape large, fast orders flying in, showing that buyers are rushing in to support this price up. We didn't see absorption, which I'll go over later. With absorption, what you would have seen, orders still rolling in, but the price not moving. That would tell you that the price is being absorbed. All those buys are being sellers here. This zone is not giving us a bounce. The price is not moving despite the tape speeding up. This signals like kind of like a dam with water behind it, and that water's rushing, and we can't bounce back. Like the dam is not going to hold. That's what it's telling you. That water's being there's too much pressure and that pressure is not providing a bounce for the price, this zone is going to break. And then once it breaks, usually the price will flush down further. Instead, what we saw was tape sped up and the price moved up with it. It supported the direction that we want. It supported our trade. It gave me more confidence to enter on this green candle. Does that make sense? I know that was a lot. If you have questions so far, just say them right now, and we'll go over that before watching this kind of quote unquote live, which honestly, like I've tried to play this. I've been messing with this literally all day yesterday. It's almost impossible to get this to look exactly like what you would see if you're watching it live. The on-demand feature is not super fast. Questions?
Yeah, you should record it.
Yeah, I will. So that's what we talked about yesterday. When I get back from Japan, I'm going to record one of my scalping sessions, and then I'll post it on the website. I'll just post it on YouTube or something, and you guys can go watch it. And I'll kind of talk while I trade when I do that.
But yeah, so I got a question. So basically, time and sales, ignore the red and green. It doesn't mean anything.
So that,
it's more
yeah,
of the. You go.
Okay. The red, all this means is the price here is lower than what it was in the previous line. Okay. It's just showing the price went down here, the price went up here. It doesn't mean a buy or sell. It's I wouldn't say ignore it. It tells you, let's say you're not looking at a chart and you're just looking at the tape at the time of sales, which some people do. So you'll see that if you're in that situation, you'll see, okay, price is going up while the tape is speeding up because it's a bunch of greens. So I see the price, that means the price is going up as the tape speeds up. It's supporting that direction. Personally, I don't pay too much attention to it. What I observe is the speed and the size, and I look at price on my other screen. But that's what the colors mean. That's personally what I do. I wouldn't say it's useless. You can use it. I personally don't put too much emphasis on it. All it's showing is which way the price is moving.
Okay, cool. So you're looking at the chart for the price, and then for the speed, if the chart doesn't align with the speed, which you were talking about, it's most likely saying the dam is going to be broken. If it does align, that means there's a price. I mean, the bounce coming, possibly.
Yeah. So if this candle just stayed down here and we didn't get a bounce and the tape was speeding up, that's telling me that those orders are being absorbed. This zone is not providing enough buyers to overcome the selling pressure. It means that this zone might be about to break, and then as soon as it breaks, the price will just kind of fire down. It'll flush down. So I don't want to take that trade. Whereas if I saw the price quickly go up, which is what we saw as the tape set up, as the size went up, that supports my notion that we're going to wait for this candle to complete. And if it's a trigger, I'm going in.
And what size do you look for? You say you look for sizing as well.
Yeah, I'm looking for like thousands and high hundreds, and it's more so relative to what you were seeing before. Like if you see a very stale tape while the price is approaching the zone or right at the zone, and then all of a sudden you see an increase in these size and the speed of the tape, then that's your indication that being built up, this price. And this is easy for me to say to you. It's something you have to kind of you need screen time. You need to watch it happen over and over again and observe tape, and over time you'll be able to identify it yourself. It's very easy for me to say this, especially with the tape kind of frozen in front of me. So I just want to emphasize that it's not going to be easy. You have to practice this.
All right, cool, man. Thank you.
Yep. Is there a scenario that price goes up but the tape does not confirm it? Yeah. So there could be a scenario where the tape stays slow and the bids aren't really moving up as high as you want. Like the size is not as high as you want, and that's telling you the tape is kind of if I want to go in or not. So the tape is the time and sales are there to just add confidence to your trade. Sometimes it won't. And then you kind of have to decide, will I still take this trigger or not? And yeah, Isn't price a result of tape with almost no lag? Isn't price the result? Yeah, so yeah, it is. The tape, this is a list of the orders going through. So the price is a result of that. That's correct. And price can go up on low volume. The price can go up on play when it's going up on high volume. That's more confidence. A low volume move is usually not sustainable. Friday, you jumped out of the ES short trade. Do you mind? What was? Trying to remember. Oh, was it the second trade? Yeah, I think so, right? Yes, we got out. Was it the one I stopped out of, or the one, not the one I stopped out of, the break even one? Where, yeah, so I saw, yeah, so I remember that one, the break even, yeah. I saw that there was no high volume on the tape. Sorry, no, let me go back. Price was not going down. And on parallel NQ, the tape was speeding up and it was going up. So that was telling me in my head that you've been having audio issues. Are there audio issues? Can you guys hear me?
We can hear you. It's just you're getting cut off time from time.
Oh, hold on one sec. I wonder why that is. I have no clue. Everything looks bland. How
It's
bad
when
is
you
it?
opened Thinkorswim. It started happening.
I wonder if sharing this is just too much bandwidth for this presentation. Okay, I'll try to talk slower, and if anyone gets confused, say something. Like if like an idea of what I'm telling you. Otherwise, I'll just close this out and I'll talk. Hello? Should I, is it understandable? Like, can I keep Thinkorswim on for a little bit while I talk, or should I close this and then I'll go over what I'm saying? Completely understandable. Okay, so we'll just quickly get through this, then I can close this because I don't need Thinkorswim after this, I think, anyways. I did need it for one more example, but you guys will get the idea through this one. So where was I? Yeah, so that trade that I took, we saw that tape was speeding up. The volume and size of orders was speeding up, just kind of staying still. And it was kind of even shooting up and it would come back down. So that was kind of scaring me, thinking there is price is not moving in the direction that I want, and it kind of made me exit the trade. In addition to seeing QQQ responding very well to the tape, it was jumping up. So those two things together, I decided to not take the risk and exit. And I think, from what I remember, it paid off because I think ES rocketed right after that. I don't remember if we caught that rocket. We did. I think we switched to NQ right away, and then we caught the move up. So yeah, that's a great example of when tape saved my ass. Like let's say I wasn't looking in there waiting to be stopped out. Okay, makes sense. So now we're gonna quickly, yeah, nice job. Me too. Okay, so we're gonna quickly try to watch this live. I don't know if this will help you guys, but let's just do it anyways. So I'm gonna go back a little bit. Let's go back a minute. Okay, let's go back a little bit more. All right, I think that's a decent place to start. And then I know this bugs out sometimes. I have to quickly switch this to something else. And back to Tesla. All right. We're seeing this candle being built up. See, this is laggier than normal, at least on my screen, but we're seeing this candle get built up, and what we're looking for is you see the size of these orders consistently being heavier and the speed of this tape going up. More orders coming in quickly because these are all market orders hitting the tape and filling the passive orders that are sitting on the book. We're going to stare at this for another minute. Right now, I'm not seeing much, not confident enough. See a lot of singles still, and the speed is very hard to see because of the lag here. But normally, what you'd be looking for if this was live and it was actually working well is the speed wouldn't be so choppy. You would actually be able to see it get faster and slower. Okay, so now we're bouncing up. Now I really want to start seeing some heavier tape start flowing in. And it's very hard to identify just because of how laggy this is.
You would also be watching Bookmap currently for L2, right? If it's matches with your
yeah,
support.
you want to see thin. Don't want to see walls in front of you on Bookmap. And on Bookmap, you want to see that bubble getting bigger. That's the volume, right? Which is essentially what you're watching for here. You want to see volume pick up as the price rises. Okay, now I'm starting to see at least more consistent, bigger orders, which see, this is like almost impossible to show you guys just because it's so, like if you were watching this live, you would see these consistently bigger orders start hitting the tape versus a bunch of ones, especially right when that candle was closing. Yeah, I think the best way for me to show this to you guys is record it live on an actual trade because this is very hard to see on here. Like you want to see these chunks of large orders hit the tape and at quick speeds as the price rises. Does that make sense? I don't think that example is very useful, like the live example at least, but just because I need to record something and show it to you guys. Like if you're watching that live and you have experience, you would be able to see that the tape was speeding up and you would see larger chunks of these big. This candle was about to close. That's when I noticed it. Okay. Do you look at both buy and sell orders on the tape? I meant they're volume. No, you're looking. So if price is moving in the direction you want, but while the volume is picking up, aka the tape is speeding up, and you're seeing bigger orders hit the tape, that is what you're looking for. That is what's going to support your trade. Okay, I'm going to close out Thinkorswim so I'm not chopped. Again, try opening it again for the next example, but I don't know how helpful it'll be just because this on demand is not good. Okay. Let me share my PowerPoint again. Actually, let me share this. Just we can just watch Bookmap really quick to see how it played out. Tesla on the zone too.
Do you only watch ES on Bookmap or NQ and all that?
I only watch ES, and if I'm trading QQQ, I watch NQ. I do. We're just gonna quickly fast forward. So, what on the tape side, if I had it open, you would be seeing as price moves up, that tape keeps speeding up. Eventually, the tape will slow down. The tape won't just keep going up and up as the price moves up, and that is your indication. Like, okay, is the buying pressure slowing down? Should I start taking profits? Am I seeing liquidity on the Bookmap above my price? So those are walls that we're approaching. Those might also be zones on your chart. That's profit here. So all those factors together will determine how and when you take profit, if you leave stuff on the table, and that's something you're going to have to learn as you practice. So we see price moving up. See very small. This is not big orders. The next big level I see is around this area, 257-ish. and we're going to see what happens. We had a little bounce off the orders that were sitting in this 256 area, and we're testing 256.4. Normally I'd still be in though, because guess what? Once that bounced down, there's also support down here at 255, and we bounced off that. Now I see like a lot. You see a good amount of selling on right on top of you, right above where the price is. You might want to take some rest, keep going, and it clears those levels. Blah blah blah, and then yeah, at this point the tape is likely slowing down. So at this point, personally, I would probably be in half or less of my position as the tape slows down more and more, as those orders. And yeah, so that's basically what you're looking for on the L2 side. You're looking for these heat levels, and you're looking for confirmation with your looking for the volume off these levels, which is confirmed by the tape, as well as these spheres that you see. So let me quickly go share.
Nancy, one question, like what are the columns on the left, like how to interpret them?
You mean the right?
So on the right, sorry.
Yeah, so for the purpose of this video, all you want to pay attention to is the first column, which is the price, and the one next to that is the size of the order sitting there. For some reason, this recording is not showing the, like normally you'd be able to see the size up here too. Their settings are probably different than mine, but you want to pay attention to the size of the limits sitting at certain levels. Does that make sense?
Okay, so so these are the sizes that are already there, like 454, there is a size of 45158, like the lowest price, right? Like 454.
Yeah, so that's the number of orders sitting at this level. That's why this is, you see this line, it's a pretty dark orange, and it coincides with the size of number of orders sitting there at 254. It's 45,158.
Okay, so these are the sitting orders. Basically, these are just limit orders that are sitting.
Yeah, they're passive orders, limit orders sitting on the book, waiting to be filled by market orders.
Okay, and then the next two columns we don't have to interpret at all, is it?
No, so I will talk about them, and I don't want to turn this class into a book map class.
Sure.
So this is more tape reading. So I'd rather kind of view book map as just an L2 here. So all I want to emphasize is this first column, which is the price, and the second column, which is the size of the orders on the book. And the next few columns, they're different settings that you can set on book map. I'll have a whole separate the settings I personally use and what they mean and how they can help in your trading also.
Okay, thanks.
Yep. Is it still choppy, guys? The sound?
Yeah, from time to time.
That's so weird. All right. I don't know why. I'm gonna quickly check my internet speed. My speed is super fast. I'm at 500 Mbps. Sometimes if you disconnect and connect again, it resolves the issues. Like disconnect completely. Will that stop the recording though? Let me turn on testing. It's still is it still pretty choppy for you guys?
No, we can understand.
Okay. All right. If it gets really bad, just type something in the chat and we'll try to fix it. Okay. So we're done. So I'm done with book map. I'm going to show you we're going to walk through this. So this is where we entered. We'll just quickly go through what happens. Worked out great. And so as this price is moving, I just want to emphasize we're not just looking at this, although this is the main focus. The price is the main focus. The tape and bookmap. So it's like these three things I'm focused on as I'm in this trade. Blah, 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 blah. Okay. And eventually this ends up being like a whole zone to zone move if you ended up holding that long. And this level also coincides with a level on bookmap, FYI, and that would have been another trade, although it's too late for me to trade. I usually stop trading by then. Okay, let's PowerPoint. Is your mic Bluetooth? No, my mic is plugged in to my computer, so. Okay, back to PowerPoint. Where were we? Okay. Yeah, here I'm just going through exactly what I just told you guys. That's the flurry of large orders we're seeing as this candle got built up. And same thing, we saw the move complete. And then all this is a great example of putting tape reading together with technical analysis. And in my case, the support and resistance zones, and the result being a high confidence trade that ended up paying off. Okay. Yep, as you see the bounce continue, we want to see the time and sales continue to show high velocity orders with increasing price. We want to see very thin offers on our path up on the level 2 bookmap. I pointed that out. So we want to not see a bunch of orange and red bars on top of the price, because those are areas we have to get through then, and you have to watch closely if we reject those areas or not, and those can be areas you start taking partial profits. We also want to see the zone we bounce off to act as support when it's retested, and this also can be confirmed with the level 2 by seeing if more bids have opened up right after that bounce. And I didn't get to walk through that, but I think on this example, okay, I do have a picture of it. So after we bounced off there, this 254 level got stronger. I don't know if you noticed it while I was playing the video, but more bids piled in after seeing that bounce. It normally, when I say that a zone gets weaker after it's tested, it's true. Normally bids get wiped out and it leaves less bids there to get filled on the next test. In the case where you see the bids pile up stronger, it's just showing you that there's a very strong buy support at this level, and if this price comes back down here, there's a good chance it's going to bounce again, and it should give you even more confidence to hold on to the trade, or if you take profit, maybe even re-enter if there's a bounce. Right. Some other things to watch for when reading the time and sales. So tape speeding up as an intraday level gets cleared. What this means is someone talking. Ooh, sorry. Can you, I'm getting some echo on my end. So if you have your mic on, can you just mute it at least till I'm done? So tape speeding up as an intraday level gets cleared. This usually signals continuation to the upside. So in my case, an intraday level could be the high a day or a red zone that you see on my chart. Those are all intraday levels because they're weaker levels. So if price can easily chew through those levels, there's a good chance the price is going to shoot up and continue up higher. So if you notice this while you're in a long position and a resistance, an intraday resistance gets cleared, it is a good idea to hold on to that position. If you see the tape speeding up as that level broke, or even use that at breakthrough above that intraday level to get into a long. So normally I say wait for a retest of a zone, and 90% of the time that's true. If it's a red zone, there's a very good chance if it got chewed through quickly, the price will just continue up if the tape is speeding up. It won't come back down to retest that zone. For blue and yellow zones, every time wait for the retest. For a red zone, there's a good chance that retest won't come, and you can enter with the stop below that zone if the price reverses. Okay. Any questions? No? Okay. So another point, if you see a large size on the offer on level 2/bookmap, and you see that offer get taken out very quickly, that signals slamming market orders. They're taking liquidity away from the market, and that tape will speed up as this happens, showing that an increasing amount of orders are rushing into the market. So I kind of talked about this before, like the dam example. You can view this as water rushing into a dam until the dam, right? It's showing absorption. Seeing this will almost always signal a flush down or up in the same direction that the price is already moving once that level breaks. So from a zone point of view, think of it as like a very large support or resistance breaking. And what usually happens when a very big level breaks, it's almost always followed by a flush. So if, let's say 450 on SPY is a huge level and we see price get there and then tape speeding up and bigger orders coming, but the price is just not moving, it's just chilling in that zone, it means that zone will just shoot down. So all these things are things to keep in mind. Don't just stare at a zone and kind of wait. That is the argument against the people who say reading tape is outdated. You can see everything on price, which is not true. You would not really be able to see that without looking at the tape. As a way to interrupt this, let's say it's a resistance up. Bears are trying to hold. I'm reading someone's question, by the way. But then, so it's a resistance up. Bears are trying to hold, but then bulls would be slamming market orders to break it through and continue momentum. Okay, so bears are trying to hold the resistance. Okay, and seeing the standing bookmap order block disappear. Wait, order block disappear and quickly fill up represents that. Yeah, so when that, so two things. The line on bookmap, firstly, you have to keep in mind and make sure it's not a spoofed order. And you can tell a spoofed order is going to disappear like in a snap, sometimes even right before the price gets there. It's something you'll visually filled, that number next to that line will just kind of disappear, and that's telling you that was a spoofed order. Let's say that's not the case and we see the price get to that heat level on bookmap, aka your resistance. Yeah, what you're saying is true. Once the price gets through there, it means those orders are gone. That level is going to disappear and the price will continue up. It means the sellers there got absorbed and the bulls won. They were to absorb that whole seller and keep their momentum and push the price up. Okay, next slide. This is the next example we're going to walk through. So I'll just go over the picture really quick. So the 44, this is I think sometime in August, I think August 24th or something like that. The 44.50 level on ES, it's a strong level on the daily time frame, and I know that when a strong level breaks, there's usually a continuation to the downside, and we just talked about that. So we can confirm this if we're trading to the short side or if stopping out of longs by watching how time and sales shows the absorption of this level along with an increased velocity of tape. There's a question. Can you repeat again what you just said about how treat? Let me go back up there. So all I was saying was, I don't even know what slide that was, but I'll just talk about it. So all I'm saying is the red zones on the shared charts are inherently weaker zones. That does not mean you can't bounce off them. You definitely can. You recognize those zones and support your move. But if you see price get to these zones, the red zones, and you see the tape speeding up, but the price is not bouncing, there's a very, very good chance once that zone is broken, the price will not retest it and it'll just continue in that direction. Just because think of it as like a dam that's not as strong, right? When a very weak dam breaks, the price is going to shoot in that direction much quicker. Whereas if it's a strong zone, and if it breaks, the safer thing to do is wait for the price to come retest that zone and treat it as the opposite zone, support or resistance, whichever one you're going for. You did not find this helpful on swing trade. Which part? Like reading tape? Yeah, you can read tape to get better entries and exits on swings. But this is more so something that's intraday. Like it's something that you're watching minute to minute for your trade. So from that sense, this is not something that you should rely too heavily on for a position that you're planning to swing for days or weeks. It's more so something that you're identifying in real time, and you're trying to get in and out of that trade based on how the tape is changing. The tape right now, what you see on the tape is not going to have any impact on the price 2 days from now. What the tape is showing you right now is what's happening at this moment, and you have to make a decision right now for the trade, and you have to get out of that trade at the. Does that make sense? It can help if you're trying to get good entries and exits on a swing. You're trying to like day trade around your swing position. You can definitely do that and kind of try to improve your cost basis on that swing. So in that sense, sure, it can help, but it won't help you in the long-term goal of your swing, because the tape has no influence on such a long time frame. Okay. Yeah, so this 4450 level, it's a big level. We want to see what tape does here. If tape speeds up while the price doesn't move, it's a good chance it's going to break, and we're going to see continuation down. Let's see what happens. I'm going to share my other screen. Okay, yep. All right. So here's Bookmap. We're going to first watch Bookmap because honestly, like, Thinkorswim, but I don't think, because of that lag, I don't think it's adding much value here. But I can point out what the tape is doing based on these, the size of these bubbles, and I'll make a point to what to look. Okay. All right. Right away, we're seeing, so there's still support down here. Okay. All the way up to 448-ish. And I'll show you on Trading View this also, and I'll show you that we had a zone there which got absorbed. So right now you're seeing these bubbles expand. They're looking bigger, and they're expanding as these levels get tested. And if you look at this on the tape, you're going to see the tape get bigger and bigger and faster as this level gets tested. And it's telling you that there's absorption happening right now. Sellers are absorbing the buy orders down here. Let's speed up a little. We're not getting any meaningful bounce off the zone yet. And boom, so it's cracking. Note how these spheres are getting pretty large now. The volume is picking up as this giant level breaks down. And there's still no meaningful bounce. And they're gone. Those levels are gone. We're likely headed to, what's the next big level? 4440. And that's red. There's a lot of orders sitting here. So let's see an even better example. These new yellow orders that support this giant level down here. Still no meaningful bounce though. There isn't high volume yet, but there's not. And this bounce that you see, if you saw this on tape, it won't be a high volume bounce. This little pop you got of 4 or 5 points, if even, might be 3 points. It would be on slow tape with low order size. Waiting to see if we get down to that. And note how this 4450 new orders have appeared. And what are these? These are sell orders. They're above the price. So now guess what? That giant level we had at 4450, it's become resistance, aka the zone breaking and becoming resistance. We broke the zone, retested it, and it rejected. So the next big level is this 4440 level, which we want to see if we can get a bounce there at least. Now, same thing. The price is getting close. So normally what you would want to see is as tape picks up, as volume picks up, we want to see, wow. Look how, so if you saw this on the tape, you would see a very quick flush of sell orders that completely absorbed all the buyers here. Like tape would be shooting right now, and the size of those orders would be big while the price just does not bounce. That tells you that the momentum is with the sellers. They want to take this down lower, and that level is gone. And then, yeah, this goes down much lower. Eventually, it will find support, but note how appeared again after it disappeared. This has become resistance, and you saw a quick test of it and a rejection. So this is all. So I hope you're seeing how you can use this in conjunction with the zones on TradingView. It's kind of giving you a more detailed view of what's happening behind the scenes, behind the price action. So price action isn't everything. There's volume behind that price action that you need to observe through tape to get an idea of what exactly the traders are doing, like what's happening. Why is the price moving this way? And that's what reading tape is going to reveal to you over years of practice, months of practice. So I'm going to show you this on the ES side. That was a level we had. This is when you would see that quick flush in tape and this level just completely breaking. And the price just flushes down, straight down. These small bounces you would see within each candle would be very short. I'll just continue down and down with an increasing velocity of tape. And that's telling you there's momentum behind the sellers. And that's basically the part I want. And it flushed down here too. I didn't show this part. Yeah, everything is just getting completely obliterated. Any high, you see the zones breaking, any sort of retest is just rejection, sellers stepping in, sellers setting new orders at these broken levels, which you will see on Bookmap as those heat levels appear again once that level has been crossed through. And all this together is supporting your short trade. Let's say you took a short all the way up here at this zone. Normally you want to be like, okay, I'm at a demand zone, I want to take some profit. But if you're looking at the tape, you would quickly identify that the tape is screaming right now. It's going fast. The order sizes are going up, but the price is just not bouncing. This is telling me this level is going to break, and this is a significant level. If it breaks, it's going to continue down much more. And that should give you conviction to hold on to at least runners or partial position to ride this down further. And you do that at every level to figure out if should you take profit or should you hold. Why do you not use chart patterns to trade like double top, double bottom, wedge, triangle, bull, bear, flag, breakout, etc.? I do use wedges. Double top, double bottom. I feel like flashback or some of you might not even agree with this. Some of you might think I'm an idiot, but most patterns that I see, from what I've seen, they don't have. They can be correct, but in my opinion, they don't give a huge inkling to what's about to happen. And once things do happen, people will point out patterns that held true and kind of emphasize like, hey, if you just watch this pattern, this would have happened. That being said, I do pay attention to some patterns such as wedges. I do look for double tops and bottoms, but that is not something I put huge emphasis on. In my opinion, support and resistance are king. They're going to be the first thing you want to look at. After that, if these bull, bear flags, whatever other shapes you want to use, help you on top of that, use them. Just one day I want you to go back and observe someone who strictly just uses those patterns. One, see how they perform, see how they trade, and two, see if they're someone who always will go back in time and point out there was this pattern here and it showed what would happen. It's easy to identify those patterns once the prices move. That's all I'm saying. But in my opinion, much emphasis on those patterns in real time to try to predict where price will go. In the long term, in my opinion, it just doesn't work. It can be something to add confidence, but it's not something I would personally rely on. That's just my opinion. I know a lot of you love to use patterns, and if it's working for you, great. Personally, I have not found too much success putting a lot of weight on them. Support resistance is what's worked for me, for scalping at least, in addition to tape. 10%, 5% might help me. It might add some more confidence to my trade. I won't make a decision off it though. Yeah, so yes, you get the idea. You guys get what I'm trying to point out. The tape, you want to look at velocity of tape. You want to look at see what price is doing as that happens to give you an idea of what price will do next. Okay, let me go back to sharing the PowerPoint. Okay.
I got a question. Would you be able to do 2 lives at once? For example, you have one live looking at your charts and the other one on bookmap/time and sales?
2 lives, like 2 different sessions? Like 2 different, both screens? I think I can kind of overlay it into one screen. Is that what you mean?
Yeah, so if you like when you do the scalping, we can see both to help with the understanding more of the time and sales and bookmap.
Yeah. So I've seen what's his name? I don't know how he does it, but Jim James, I don't know if you follow him on Twitter. I've seen his stream sometimes, Captain Jim James, and he overlays different screens all into, he like compiles parts to different screens all into this one screen where you can see everything. So I'm gonna try to figure out how he does that and try to do that myself. I think that's the best approach versus being limited. And if I can figure that out, like just share parts of different screens all on one screen, that would be perfect. And I can show you guys the tape, I can show you bookmap, and I can show you the zones trading view. So I'll try to do that once I get back from Japan. So yeah, look out for that on the future live scalp sessions. I think that'll help a lot. Good idea though. Good point. Okay, yeah, we just talked about this. We saw the 4440 level also get completely smashed. We saw volume pick up as the level was tested, while momentum is on the seller's side. And then, yep, this is just a summary of what we just saw. Absorption, extreme. This is when I say the tape looks bearish or bullish. So that would be, AKA the sellers are strong. So large levels not providing the bounces you normally want to see. And the vice versa is true for breakouts on the upside. Bullish tape, big resistance levels just getting absorbed. Okay, quick summary of everything, and then we're going to go through some questions. So reading tape should always be used in conjunction with a TA-based strategy and act as confluence for your trade. It should not be the basis of your trading. You don't buy or short a stock because you see the tape speeding up a bit. That's just not enough information. You need to consider support and resistance levels and also combine the data from the tape with your technical analysis. The liquidity at different prices and can be used to determine and confirm support and resistance levels. Show you the conviction behind a move by showing the size of the orders that are coming through as well as the speed. So that's what we just talked about. You need to internalize that concept. You need to watch tape while the market's open and identify when that happens. Have your levels pulled up on another screen and have the tape pulled up on one screen and watch when the price gets to a level and watch tape, watch what is happening and watch how the price reacts. It's going to look like complete gibberish at first. Like maybe in your first couple months, you'll be like, well, what am I doing? I don't see any difference in the tape. But you need to really just give yourself screen time. You will be able to identify the tape speeding up or slowing down when levels are tested. The time and sales can show you the conviction band to move. Yep, by showing the size of the orders that are coming through, as well as the speed. A faster moving tape while price moves in that direction, in the direction that you want, is confluence for your trade. A faster moving tape while price stays stagnant right through that key level, it signals and it shows momentum is on the way the price is already going, and it usually leads to a break and continuation down from that level. When you translate this to the support and resistance zones that I provide for the blue and yellow zones, don't just jump in, wait for a retest, but for the red zones, there's higher likelihood, in my opinion, from what I've seen, that those weaker zones, when they get broken, they just don't get retested. The price, if they get absorbed, so if they get absorbed with high volume, that's the point, not just if they break. You need to see the in high volume orders. If you see that combination, there's a very good chance the price will just keep going. It's not going to retest that zone. Some might consider tape reading as simply reading the price action, but it is much more than that. A skilled tape reader, and I don't call myself a super skilled tape reader, but I would say I'm better than most. I'm pretty good at it. They don't just check whether the price is rising or falling. They use the volume information that's provided by the tape to see the strength of that move. Price may not be moving at all at a key level while the tape is screaming with big high velocity orders, and that's showing absorption. Someone who just looks at price action. So when you combine all these factors together, it should definitely improve your scalping. For me, support resistance zones are the majority of my thesis for all scalps. Level 2 and time and sales, they add confluence to the trade. They are the secondary checkbox to approve going into the trade or stopping out of the trade. Make sense? So that's the whole presentation I had. I covered everything I wanted to for tape reading in terms of scalping. So if you have any questions, now is the time to ask. And then after these questions, we can kind of, I know some of you wanted to look at drawing some zones. We can kind of quickly go over that too. For those who are scalping noobs, is the free version of Bookmap on TOS enough for this? Yeah, it's enough. That's all you need. Just get the free version on TOS. That's enough for what I've gone through, and you should be able to see everything I showed you in this presentation. Yeah, YouTube has streaming, but it's lag. It lags. That's the issue. I tried lots of different. I tried Twitch, YouTube, their Pick. They all have lag, and with the type of trading that we're doing, which is live scalping, we need it to be pretty much real time, or it just wouldn't work. Oh, you mean YouTube has streaming for Bookmap? Yeah, it does. Here, I'll link it. It's called Think with Bookmap, and they stream live every day. It might be slightly delayed though. I haven't used, because I have my own Bookmap that I look at, so I don't know if there's a slight delay to this, maybe a second or so. So just be aware of the channel and the chat.
Stan, will you be posting this this PowerPoint as well on your site?
Yeah, I can put the PowerPoint too. I can put this on a drive and I'll link it. Any other questions?
Yes, Tenzi, one confirmation, not actually a question. So Bookmap, how you use it is basically to confirm your support and resistance levels. That's the first thing, right?
Yeah, to add
Okay.
confluence to your own support and resistance levels. If there's other levels on bookmap that you don't have drawn, that doesn't mean you just ignore those levels. That's a level you don't have on your own chart, but you need to pay attention to it on book.
Understood.
So yeah.
Okay. And then the second thing that you look for in bookmap is, let's say, if a particular support or resistance uh, is acting well, then is there limit orders building on them to give you enough confirmation that even if the price comes back to it, it will bounce or drop from that level, because there are a lot of limit orders on that level. So is this the two piece of information that we get from bookmap, or is there more to it?
There's more to it. The second, there's a little bit more. So the second point you said, yeah, that's another piece of information. You want to see that once, let's say you're playing along off a support bounce and it bounces on bookmap, you want to see that there's still support down there. You want to see that there's bids still sitting down there to support that level, or there's even more bid, maybe more buyers jumped in. That's something you want to notice. And the other thing on bookmap you want to pay attention to is you want to look at the size of those bubbles. So that is showing you how much volume is coming in for that specific time. So let's say a zone gets tested, or see that sphere expand, showing that buyers are stepping in as the price moves up. If the spheres stay very small on a bounce, it's a very suspicious bounce. You just have to keep that in your mind. That means it's bouncing on, usually does not sustain. Another thing you want to notice is the sphere getting bigger while the price is not moving? That's telling you that there is volume right now, but the price is just not bouncing. That's another indication of absorption. Like, this level might break. I need to be careful. The final thing you want to look for is how thin the book is above your price. So let's say it bounces and you're in this long trade. What levels are you approaching? About thick are they? Are they like red, orange levels? Then I need to be careful when it tests. I need to watch it closely. If it starts rejecting, maybe take a little bit of profit. If there's nothing, if it's just air, like black and blue levels in front of you, that supports the idea that the price is going to keep moving up unless new sellers step in at some point. So it gives you more confidence to hold on to your position, not take profit yet. And yeah, those are the main points I think that you want to kind of internalize for bookmap.
Got it. Makes sense. So one more question on this. So the third point that you said, like the bubble, right? The size of the bubble. But the size of the bubble, we are also kind of checking in the tape also, time and scale, right? Like they are both correlated, correct?
So size of the bubble is just an easier way to kind of get that data point, like, okay, is volume going up or down right now? But the tape is a more granular view of that, a better view of that. It's showing you how quickly those orders are coming in, how large those orders are. But yeah, bookmap kind of visualizes that, at least the size of the volume.
Got it. Yeah. So they are both the same things. One is a better representation, easier for our eyes, correct?
Correct.
Okay. So then I'm wondering, like, if let's say if the size of the bubble is the volume or the time and sales information that we are trying to get, is it possible that we get the same information by, let's say, on trading view, let's say we go down to a 10-second scale or like 20-second scale and just look for, is the volume picking up on that smaller time frames? Will that give some kind of it may not be the most.
I mean, technically, yeah, because technically you're looking at the same data, right? You're looking at if volume is picking up. But in my opinion, when you're trading, it's much easier to just, instead of looking at the volume bars on such a small time frame and trying to analyze, are they picking up or down? You have to make all these decisions in your head at the same time on bookmap, right? It's just much easier to see just the size of a bubble, and that tells you, like, is volume going up or down. And also tape is the more accurate, I don't want to say more accurate, but more granular view of that. Now, watching that on trading view on a 10 or 20 second time frame, I just feel like that would be very hard to kind of like digest and then take the trade. I haven't tried that. I feel like it'll be much harder to do that versus what I've shown.
Sure. Yeah, I just wanted to relate all of these things, right? So now it all makes sense to me, like how these things are correlated to each other.
Yeah, essentially you're just looking at volume and speed. Volume and speed of orders is what tape is trying to relay to you, right? Those are the two pieces of information. And the volume aspect of that you can get through multiple different avenues, whether it's Bookmap or, like you said, through TradingView. But yeah, it's all correlated. It's the same stuff.
Okay, got it. Okay, thank you so much, Nancy. Yeah.
Yeah.
Have you ever had a time where the price action was at the support and it starts speeding up, but it didn't go anywhere? But then the next few candles, it start going to the direction you wanted to, yet the tape was slowing down.
Yeah, no, that definitely, it'll happen. Anything can happen. So let's say the price gets to your support level, tape speeding up, and it's just getting absorbed, and then all of a sudden the price shoots up on lower volume. Do you take the entry? It's just a decision you have to make. It's a less confident entry than the price bouncing up on a speeding up tape. That's the only an entry. You can take it just confident entry. Maybe I should size lower or have a tighter stop. So all this is just data going in your head and you have to make a decision. But yeah, that can totally happen. It's just something you need to be aware of if you choose to take that entry. Make sense?
Yeah, it does. Because I also like trading midday, but I feel like I'll run into a lot of those midday since it's lower volume. So
Oh yeah, if you're trading midday, honestly, don't even look at tape unless it's near a level. It's just going to be slow as hell. It's just going to be very hard to identify patterns midday. You might see some when it's near levels, but if it's just grinding around, you're just trying to force a trade somewhere in there, maybe just don't even pay that much attention to tape. Pay more attention to tape when it's near a level already, and that difference in the tape that you're looking for is going to be like 100% more easier to identify when the volume's higher. Yeah, no problem, Al. Any other questions? Spend just a little bit of time because I know some of you wanted to see zone drawing. I mean, I can show you. We can just draw some zones, and then you guys ask questions, or you tell me what to draw zones on, and then I'll answer questions.
Yeah, definitely. So let's start with the big one, the blue zones, because I really try to those. I really try to find how you get those, and it's kind of
all right. Let's do it. Let me share my screen. Okay. Let's pick a ticker I don't have zones on. Unless you have a specific ticker that you want to practice, you want me to practice on.
That's up to you. Like if you want to do SPY, we could do SPY, but if you want to do a different,
let's just do one that I've never drawn anything on. Okay, this is a pretty crappy chart. Let's find something that's.
Can you do like Texas Instruments or TXN?
Texas is okay. Yeah, that's pretty good. Let's do this. Let me turn off. All right. First thing, we're gonna go on the weekly. And just look, what I'm looking for right now is I'm just looking for bounce points right now. So what do I see? I see that this top area has been tested multiple times and it has rejected. So let me make sure. I think the color is blue right now. Okay. So how am I drawing this? And we're on the weekly right now, so I'm not going to be drawing too many on the weekly, just some really big rejection zones that I see. So what I'm doing is the first candle that tests this area, or the lowest candle that tests this area, which usually tends to be the first one, the bottom of the zone is gonna be at the top of the body of that candle. So the bottom of the zone is gonna be at the top of the body of this green candle. The top of the zone is gonna extend to where the highest point of this test has gone. So these 2 weeks, we tested all the way up here. That's the first zone I see. This is on the weekly, okay? So we're going to go down the daily and be drawing many more. Another big area I see is this area, but I'm not going to draw here because what do I see? Over here, I see there's a large variety of tests, and I know that we're going to see these levels when I go down to the daily, so I'm going to leave this to get more accurate zones on the daily. This area, though, these two bounces, this is pretty significant bounces, and it's on a weekly. I'm going to draw something here. So the body of the lowest candle, because now we're drawing support into the resistance. In this, it was the body of the lowest candle up here because it's the resistance. So in this case, the body of the highest candle, not because it's the opposite of resistance and the support. We're going to do the body of the highest candle we want to pick. So this red candle down to the wick of the lowest test. So this green candle is the lowest. If you zoom in, this should go to the body. This should go down to the wick of this one. And technically, I'm going to move this up even a bit more because this candle's body is even a little bit higher.
Just a side question. What do you use to draw this? Is this like parallel lines or something on TradingView?
This is a rectangle right here.
Rectangle. Okay, got it. Okay,
Yeah.
thank you.
And like I would normally draw these zones down here too. We're not gonna get down here, but if you wanted to draw these zones, one second, let me zoom in more.
So pretty much the ones that stand out the most on the weekly you draw now, and the one that has more like touches and all that, you go into more detail.
Yeah, because like if I was to draw something right here, I technically could, but this is just not, it's just too big of a zone to do plays off. And I know these levels are gonna show up on the daily, so I don't want all this chop covered up inside a zone. So I'm just looking for really big high level bounces. Might just be one or two zones. Like I'll just draw one here, even though we're never gonna be coming down here, in my opinion. So down here, you see these pretty significant bounces down here twice. So I'm going to go down to the wick of the lowest candle up to the body of the highest candle that I want. And that's close enough. I think I hit that body. And then honestly, I'll just leave it there. Technically, I would draw one here too, because look, you have test here, and this is in line almost with a test here. So you could probably, actually I will draw this because this will give you guys a good example of
Stanley, what does it mean from the wick of the lowest candle to the body of the highest candle? How do you identify highest candle here?
So what I mean by that is, right now we're drawing a support zone, right? The price bounced up off these areas. So what I mean by that is for all the candles that you're considering. So in this case, I'm considering 1, 2, all these candles that entered this area, 1, 2, 3, 4, 5, these 5 candles, right? Do you see that?
Yes.
I'm going to pick the lowest wick out of all these candles. That's going to be the bottom of my zone. This is going to cover the price to the lowest point it's gotten. That's the psychology behind it. You're covering the price to the lowest point it's gotten over these 5 candles, up to the body of the highest candle. So in our case, this leftmost red candle, which is in this area, is going to be where the top of the zone goes. Make sense?
Yes, thank you.
And this
yeah, actually, no,
Mhm.
why not see, there are 1, 2, 3, 4, 5 total wicks in that area, right?
Yeah.
What about the last wick? Isn't that the highest body there?
That's just okay. Good point. It's too high, and that's like intuition. This is too high for me. Like I would not. This is covering $6 on a 90. Well, the price is that's just too high. It's like a 7-8% move for me. But that's a good point. Yeah, technically, I guess the rule I said gets broken because I'm not going up to the body of this candle, and kind of comes into play. Like if I was trading, I just would not want a zone that's that big. Like
Yes.
like if I zoomed into the daily, I could probably draw another zone in this area somewhere off multiple bounces, and that would cover this candle, which we're kind of quote unquote ignoring this body right now. If that makes sense.
Makes sense. Thanks.
Okay. And then I'll just show an example here because I think this is a good, like when you're trying to draw something off, I guess this is kind of wide. Just pretend this is like on the daily or something, or even lower. Then you want to draw. So there's 3 bounces we're trying to cover. So same rule, lowest the price has gotten, and I'm only going to go up to the wicks of these ones. Because again, intuition wise, on these 3 bounces, this becomes too wide for me. So I'm just going to cover these wicks of these left 2. Does that make sense? I know it's not like a very like technical, or how do you word it, like robotic way to draw it, where I'm just following certain rules written down. But
Right.
intuition wise, it just does not make sense to have this zone all the way like up here.
Yeah,
But
otherwise, yeah, you can't trade, right? Like it will be just zones everywhere.
Yeah, so although I'm just showing this again, but I'm not going to draw this on the weekly. It's just too much price. But if this was on the daily or something, that's how I would have drawn it. Okay, so those are all the zones I want on the weekly. I'm going to go down to the daily now. I got these 2 major bounce points. Let's go down to the daily. I'm still on the blue. These are still strong zones. I'm on the daily. Now, let's see what's left. Where has the price bounced? I see lots of, this is a huge area. Let's get some zones in here, all right? Okay. So firstly, let's see. I in my opinion, you can cover 1, 2, 3, 4, 5 bounces off with a single zone here. Do you guys see that? But I don't want to cover this one. This is too high. Like if I did, let me scroll left. If I did covered the top of this one, the top of this wick, and went down to the body of whatever to cover all these, that is too much for me. Even on a daily, that's a $5 move. But in my opinion, this 1, 2, 3, 4, 5, these 5 bounces can be covered with a good zone. So I'm going to go to the top, the high there. I'm going to try to find the body of the lowest. So I'm going to have to zoom in. So down here, that would be the zone. That would be a blue level zone for me. Does that make sense? Oh, wow. Okay. We're going to step back a little. I'm going to correct this. I'm going to treat this as 2 separate zones. So we're going to move this one up to just cover the wicks. And this is going to cover the bottom part of what we had on the zone. And here's how I drew this second one. So I went to the lowest wick I saw in these bounces, this 1, 2, 3, 4 bounces right here. And I'm going to go up to this, to this red body. If I went up to the bodies of these ones, it's too much for me. These zones are too close, and I think it's covering too much area. If we had these many bounces off this zone, it's very likely we're going to get a reaction at this level again. A lot of that was kind of intuitive and not very like, I'm doing this. But look what happened when I drew this zone. Instead of just having this one lower, you're covering those same bounces again. You're covering 1, 2, these 1, 2 bounces, 3, 4, 5. All these reactions are being covered by the second zone I drew. And this top zone, you're covering 1, 2, 3, 4. And I can move this down slightly, actually. to cover this one. And yeah, that's how I would draw those two daily zones. Is it making sense so far?
Yeah, I'm understanding.
Okay. What else do we see? So now I see a lot of support here. So I'll show you what I'm seeing. Boom. Boom. I think that's it. I'm gonna zoom out a little.
How about the
Boom.
170 price?
Boom. Huh?
The
170.
one, yeah.
Yeah, I'm gonna end up drawing one there too. Boom, boom. So you see these? Like I'm seeing it on lines. Like I'm seeing where the prices reacted. All right, let's do this lower one first. This is gonna cover a lot of balances. It's gonna be a strong zone. So first I'm gonna just zoom out and kind of put it generally where it needs to be. I want to cover everything. Cover these two. Make sure that all the balances are fully covered, and then we can zoom in and kind of adjust it to be a bit more accurate. So I've covered this 1, 2, 3, 4, 5. This one I kind of missed. I'll probably bump it up a little to cover that one. So I've covered all these bounces off the zone. So now let's see if we can tweak it a little bit, make it a little less thick than it needs to be if possible. So yeah, so we're like below where the lowest the price has gotten, so we can make the zone a bit thinner. Oh, no, we're not. I lied. So I'm not going to thin this zone out because I want to cover the bottom of this bounce. So, and in fact, I'm not even completely covering it. If you notice, the wick is out a little. So I'm going to adjust it a little. So this is what the process looks like when I'm drawing zones. Like you're going to be putting it generally where it is, then you're going to be zooming in, trying to correct to cover the areas that the price has moved to. So I covered this whole bounce, covered this. And yeah, to me, this looks fine. This zone looks fine. I'm going up to the body of this one. I think that's the highest I want to go, and that's the highest body candle I want to go to. I think if I go beyond that, I'm making the zone too thick for my liking. You technically could, because technically that would still be a demand zone, but it just provides you with less plays, in my opinion, because the price might come all the way to the bottom of the zone and then give you a bounce, and your entry won't be until it completely gets back out of the zone.
Then just to the left, just a little bit to the left. Keep going
left.
left. Yeah.
Good catch. This, I want to cover this somehow. Let's see.
Yes, exactly. There's just a little wick left, right? There's just a very little wick left for the. Okay, so you would cover that, right?
Here's what I would end up doing in this case, because I don't want this. It's too much. I had it, I think, here or something. Now I would remember the spot, and I'm gonna, when I'm zooming down more, I'm gonna come back here when I go down to the 4 hour, or sorry, the hourly.
But on the bottom side also, should we cover those two little wicks? Just right in that spot, like where we were, right?
Yeah, you should. Good catch. So basically, you want to cover all these reactions.
Got it. Okay.
So this should be covered. And if at any point, like this is verging on the being of too thick for me, but this is okay. If it got any thicker than this, what I would personally do is break these bounces up. Like I would cover most of them, and then I would go down to the hourly to add more zones in there.
Yeah,
but
so that's
good.
That's one thing I wanted to ask, because I've been doing that too since the blue zones cover a weekly and a daily chart and tend to be big. The hour can be more, I guess, in depth. That I also put zones in the blue zones, the yellow zones into the blue zones, and it has worked out for me. Do you recommend that?
No, yeah, that's completely fine. I just, that is because in general, I don't like playing with inside a zone that already exists. Like it's just that, let's say there's a blue zone, and then you stick on, let's just say you stick on something like this, which is a yellow zone. So when I'm zoomed in to this on the 3 minute, in the back of my head, let's say the price is up coming down into this. In the back of my head, I know that there's buying pressure in this whole zone. And if I enter just from a bounce off this yellow zone, it in my head, it's not confirmed to me that the buyers have succeeded yet. On a very low time frame, yeah, you can pull it off. It'll probably get a bounce off that zone. But I like taking like much more high confidence entries. And I think doing that, you're inherently reducing the amount of confidence you can put in entries like that. Just because technically on the daily level, you have not confirmed a bounce off the level, if that makes sense. Like there's still buyers need to prove themselves still to get out of this zone. You can do a quick scalp. If it's working for you, keep doing it. I've actually done what you're saying in the past. I used to have zones like this and it does work. But what I found was, although it was giving me more trades, my success rate was going down a little bit. And I'm someone who I'd rather have fewer trades with higher success than more trades. And you're actually making more money total, like in total doing that. If so, keep doing what you're doing. Make sense?
Yeah.
Okay, and then we just had this level. And then, yeah, so basically this is what you want to be. This is what I'm not going to sit here and literally draw it might take some time to draw everything. I'll draw this last daily one, then we're going to zoom down to the hourly. So we're trying to cover this bounce and this bounce because they're in line. We see a bunch of bounces here and here, but there's too much chop. And I know when I zoom in, I can get those bounces on the hourly. So I'm just going to cover this one and this one since they're in line. So I'm going to go to the bottom of where the price has been. This zone should be blue, by the way. I'll fix that in a second. And then I'll go up. I'm willing to go up to the body of this candle. So I covered the bottom of this wick, and I want to just cover it up to the body. And that's it. I'm not gonna do more here. There might be a little, like if I go down here, there's more zones here, like up here, but I'm not gonna draw all those. So let's go down to now the hourly.
You don't do the 4 hour?
Sorry, I meant the 4 hour. Yeah. And at this level, for me, I've started doing yellow zones at this once I get down into the hourly levels. So the next zones you'll see are going to be yellow because these are inherently a bit less strong just because the bounces are on a lower time frame. So let's see what we can find. And if you see something, just point it out. So right away I see one area that I want to cover. And that is
170, right?
Yeah, no, that is one too, definitely. Look at all this. But I right away spotted this. Where was it? I saw this and I saw this and I saw these big candles here, and these are in line. I want to cover this, so I'm gonna slap a zone onto there. So the balances don't need to be in the same direction. It just means the price reacted here, and that is enough to establish a zone in that area. So I want to cover, I'm just going to slap it on and see what it looks like. Then we're going to fix it. All right. So I think I already did a pretty good job. You want to cover the top of this bounce down. So go up to this wick. And you want to cover the bottom of this bounce up. I'm going to go down to this wick. And that's that zone for me. This is enough action off here to establish a zone. And then, like you were pointing out, there's a lot of bounces here. So this is going to be a bit more tricky, even though it's easier to spot. So because you want to make sure you're covering everything, but you also want to make sure you're not making it so your zone is way too thick. We're trying to cover this. Oops. And then let me see if there's anything else in line. Yeah, there's a bit more chop here. It'll automatically get covered, whatever happened here. Mainly, I want to cover these two areas, so let's do that. I can't believe there's still so many people watching this. Like you have my zone, but I get it. Like you want to still learn to do this yourself. Okay, so I want to cover all these balances. This went all the way down here. Oops, I moved the zone. And I want to make sure that every bounce is at least touching the zone in this area at least. Touch, 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 touch. Yeah, this looks good enough for me. That's why as you zoom in, it's going to become more complex. Like you're trying to think, should I go up to this body, this body? Technically you can, it's still an accurate zone. There's buyers here, but you want to make it so it's more playable, you know? So cover every bounce, but don't overdo it where you're just trying to cover too much. And that's going to just come with practice and intuition. And I've been drawing zones since I started trading, and it kind of just, I just automatically think this is the right zone. Like this is it. I'm covering these balances. I'm covering the bottom of this price. It looks about the right size. I don't want to go too high. This one wicks down. I'm going to move it down a little bit more and see if I can shift this down to cover. Yeah, this looks good. You got a little bit of poking going on, but in my opinion, like this will require thinking. Like if I go down, is this too much? Yeah, I'm trying to cover too much because the initial goal, we just want to cover these bounces up here. I'm kind of rambling right now as I think. Initially, I just wanted to cover this and this, which is covered. Okay, makes sense. That would be how I would place it because I'm covering the big bounces here, around the 172 level that I wanted to cover. And the daily is covering the bigger, higher level bounces off this 168-ish level. So that's what it looks like so far. And then one thing I notice is I don't like this. I don't like that this is poking out like this. I'm going to expand this upper zone a bit. Because the main point here, like psychologically, you want to cover the price. You want to make sure you're covering all the buyers here. Like this tells me that someone was willing to buy all the way down here. So they might be willing to do it again. They might have established other buyers that are willing to buy down here. We want to cover that. And then you kind of zoom in, make sure there's not too much poking going on. You're covering the price. Then identify more levels. Let's do one more here. So I see, let me draw this out. I see this. And this could also cover, this will cover this.
Question, Stan.
Yeah.
When you do the rollovers for every week for SPY and the mega charts, you probably start off at like the 4 hour and the hour. You leave the weekly and daily because they haven't really changed much, right?
Yeah, I do look at the weekly and daily to see but almost always those change very rarely. Like you need to let price move for a while, but to establish new daily zones or to even tweak old ones. So yeah, I'm mostly looking at 4 hour, 1 hour, and then below that. I think that's all I go. I just go down to 1 hour anyways. Intraday, I might go down to but those zones go in and out a lot. So yeah.
Can you repeat that last part because you got cut off? Intraday, you only watch the hour you said, and 10 minutes.
So what I was saying is, yeah, the daily and the weekly rarely move, but I do watch it every week just to make sure that I haven't missed anything. Mostly what gets changed are 4 hour, 1 hour, and then intraday are down to the 10-minute. Those get changed a lot. I'm actually changing those even often during the week on the shared charts. So it's updating live for you guys. Did I get cut off there? You catch that?
I got it all, man.
All right. Okay, so we're gonna just draw this
And
one.
yeah, one question, like,
Yeah.
is there any situation where we have to actually delete these zones, as more days pass off, or because this is a history, I think once you have drawn these zones, they should stay there forever, right?
No, so they can get, so let's say, excuse me, I'll give you an example. Let's say, where's the price right now? Let's pretend, let's see, I'd rather edit an hourly. Okay, let's say we draw this zone, right? I'm going to draw a zone really quick, and then I'm going to show you an instance where I would change that zone. Let's pretend the zone is accurate for now. I'm trying to cover all these bounces. And then let's say one day price comes, say price like does this, and then it, oops, I hate this. Okay. And then let's say it does this. Let's say it does this and bounces. It goes above a little. I would edit the zone. It's close enough to the zone where this zone warrants being edited. Like there's another seller willing to sell right above, and it's pretty close to the zone. I'm just going to expand this. Like if I was changing the zone, I just expand it up to cover the top of this orange. So that's an instance where you could edit a zone, and that holds true for any level. That can happen on the daily, on the hourly, on the 10-minute. For it to happen on the daily, it needs to be a big move. Like let's say we had, let's say the price, this is so hard to draw. Okay, let's say the price went like this and it did a big bounce, big bounce, big bounce. So this is telling me this zone is strong. Like this zone is doing its job. This and it just poked below. With that many bounces that happened, and just a slight poke below, that to me that warrants enough to. If it just did once and it poked slightly below, I wouldn't change the daily zone yet. Like if it wicked below it, it's not enough for me to change the daily zone just yet. If it reestablished that poke down at some point, okay, now it's happened twice. I know I'm going to edit the zone. If it just happens once, depending on the level of zone it is, if it's a daily, to me, that's not enough to warrant editing the zone just yet. I want to see it happen again. And usually if it does warrant editing the zone, it will happen again. Like if new buyers have accumulated down here, it'll probably test them again and show you that, okay, I need to expand this zone. On an hourly, if it does it once, just edit the zone. Like on a yellow zone, just edit it. Cover
Got
those new sellers.
Got it. So it's mostly editing, but you probably don't need to ever delete a zone. It's like you just
Yeah,
need to.
okay, yeah, no, we'll cover that.
Okay.
The zone. Let's say the price did if this zone gets chopped recently, with the recent price action like 3 times, this is even too many. I would have probably, if it did 1, 2, 3, like 4, I would delete the zone. I'd get rid of this. This zone is invalidated at this point. But it needs to happen back to back, right? Like if it did this, but it still respected it, did this and it respected it, keep the zone. But if you're consistently back to back seeing invalidations of the zone being ignored, like no reaction at all, that zone has been invalidated. And like, for example, let's see here, this bounce, slight bounce still, but it went through, like I'm starting, but then it bounced here. Like you need to see it happen back to back to kind of really tell you the sellers or buyers that have been sitting here are gone now. And we need to get rid of this zone. And if they start reestablishing, we're going to start seeing reactions again. And when I update the zone next, that zone will be back if that reaction reestablishes itself. Does that make sense?
Makes sense. Yeah. Thank you.
Yeah. Yep. Okay. All right. That covered that. So you guys kind of get the idea of how this works. I can do some more if you want, but I think I got the point across of how I do this. A lot of it is intuition, but the main things you're trying to catch are cover all the price, cover the entirety of the price moving off that area. And beyond that, don't make the zone too thick. That's a very relative term, but it's just something you'll be able to identify as you draw them yourself. And yeah, there's rules where you'll delete zones. There's rules where you'll have to edit zones. Intraday zones are the ones that are going to get deleted the most. Daily zones are the hardest to delete or edit, and so on and so on. I think that makes sense. To me, that makes sense. Any questions?
I have a question.
Yeah.
Go ahead.
Oh, real quick. So how far back do you usually go for, like, for instance, the intraday zones? Like, I know it's just falling back to 2022.
Yeah, I normally don't want to go back more than 2 to 3 years. Like for example, if I go out on the weekly here, or do you mean just intraday zones, like the red ones, or you mean
No,
in
actually all
Okay.
zones, yeah.
like I just drew this, like when I was talking to you guys, I just drew this because I wanted to make a point, like, hey, there's a zone here, but the prices, unless the price breaks down and starts coming here, then yes, go back here and put the zone on. In general, though, you just want to go back. So we're 2023, maybe 2021, like late 2020 to now. It's like 3 years, 2 to 3 years. Anything beyond that, normally the price will not visit there for most charts. If it's a ticker which has literally just been in a range for that long, yes, you can go back farther and put that zone in place. I'd say 90% of the time, just go back 2 to 3 years, and you shouldn't need to go back more than that.
Is that true intraday too?
No, so like let's say an intraday zone, you're drawing all the way on the 10-minute, pretty much, like those red zones. Those happen, like you're looking back like a week, 2 weeks max to establish those, even less sometimes. Like let's say the price had done this for the past 2 days, and did this, and then this. So let's say this was the past 4 days. I would put an intraday zone here, like down here. And I would know there's not much action here. Like this is just an intraday zone. I'm not looking all the way back here to look for intraday zones. It's like the past week, 2 weeks max. Like sometimes on some tickers, you'll have like literally some tickers will move like this. That's a okay, slap that zone on. That's an intraday zone. That might turn into a yellow zone at some point, like if it starts establishing a pattern on a more zoomed out view. But for now, that's an intraday zone. I'm not looking beyond like 2 weeks at the most. Usually it's the last few days.
Thanks.
That's why these zones also get deleted so often, because they just get invalidated. Like that's not a strong enough thesis to establish buyers there. There's temporary buyers there. Eventually it'll just get ripped through multiple times and you just get rid of the zone. Make sense? And just zooming in to like the 3 minute, like you're already seeing some, like you'll start noticing some good plays off these zone, like just drawing that. That's not even spending too much time on that. We didn't even zoom in further to establish more zones, but you're seeing like these plays that you would catch if you're scalping. Boom. Boom, boom, boom. Like you're going to be seeing, like you'll see a lot. And these are not even, I barely spent time on that. I normally spend like half an hour. I would spend half an hour on this chart to make sure I get everything right. But yeah, that's how it goes. And I hope that helps. Any other questions?
Stanley, one question, like ES versus SPY, right? So we have zones on both ES and SPY.
Mhm.
And you had previously also mentioned use SPY zones to trade ES, and I have found that actually more helpful rather than using the ES zones.
Mhm.
is there a way to somehow move these SPY zones to ES levels or something like that? Like rather than we looking at like two different charts, like
I think is there I swear someone said there's an SPY. Like I've never tried this. Oh, okay. Whoops. I guess I have to be on SPY for this.
because often yes there are less zones also, and it seems like SPY zones.
Yeah. So in general, I've said this, use SPY to trade during market hours, even if you're trading ES, just because those zones are drawn using real time or using higher volume times, and those zones inherently are going to be more reactive versus because when you include very low volume price movement when drawing zones, it's gonna prices just grinds around during those times, and it might accidentally, I guess accidentally is the wrong term, but it might create some patterns where you'll slap a zone on and it just won't be valid because those were established with low volume buys and sells, and they can just get ripped through when the market's open. So in general, use the SPY zones when trading ES. You can switch over to the ES zones and use those, but SPY zones will be stronger. So I don't know how to translate SPY to ES exactly. I don't know if there's indicators that I don't know what the SPY price up here.
Makes sense.
There's actually a website called spyconverter.com, but it's for SPX, not ES.
SPY trader? What's it called?
Oh, actually, yeah, there is one. Spyconverter.com.
Oh,
And then
okay.
there's also ES to SPY, QQQ2 and Q.
Oh, I see. Yeah, it would be if it does this visually, that would be cool. Or does it just manually? Yeah, this just shows
No, it
you
just
the
manually
value.
tells you the price. And then I guess you can copy and paste of the zones, put it there, and then you can put it back to the SPY zones or something like that.
Yeah, you can do that. I'll look. I'll see if there's. This is very useful. So you can start with this. I'll see if there's some sort of indicator that slaps on the price or like overlay SPY here on top of ES. That would be cool. I guess this current one I'm using, it'll show you on this top right what SPY is as you're trading ES. I guess that kind of helps, but I get what you mean. It would be nice if you could just overlay the two and kind of see where they both are.
Yeah, or just basically put whatever SPY zones have been for a corresponding price. We just put a zone here, right? Just
yeah, on ES. Yep. Yeah, you'd have to do some manual work using this, I guess, to do that.
Okay.
Yeah.
Got it. Thank you.
All right. Yeah, no problem. Wow, it's been over 2 hours. That flew by. Any other questions?
You go enjoy that A5 Wagyu if that's what you're gonna eat.
Yeah, I will. I'll send pictures. Hopefully, our trade
All right,
pair
man.
takes for the whole trip, though. So let's see. The swing trip. Okay.
Thank you for the class, man.
Yeah, no problem.
Hey,
If
Stanley,
you guys,
this is Sangram. Do you want to check the zones that I drew last couple of
Yeah.
days?
sure. Do you have them?
Can you open the Twitter message that I posted?
One sec. My Twitter's loading. Oh, are you Sangram? Is
Yeah.
that you? Okay. Let's see. We'll just quickly go over if you guys want to stay, because he used my zones for some entries and they're a little bit off. So I'm just gonna here. I'm gonna put this in Paint so I can share it. Okay, so these arrows are the entries that he took, and they're a bit off. If you watched my video on the zone scalping, you can right, like where he's wrong. I'll just quickly talk about it. So this is not an entry because I guess it depends what price did, but normally you want to see in during market hours a test and rejection of the zone. You see price already started in the zone, okay? So this is not technically an entry. You want to see the price go down. It's so hard to see. I guess it did test it. Okay. So there is an entry here, but it's not this one. It's the candle right to the left of it. So we saw price come down. These are 3-minute candles, right? I'm assuming they are.
Those are 3 minute, yes.
Let me draw with like blue. So the price came down. Price came down. It tested here on this candle, right? This candle, right?
Correct.
So we've just established the first rule. The first thing you want to see, the test. Once the zone breaks down, you want to see a test of it as resistance. The price is under the zone. This is resistance. So this wick accomplishes that rule. We've ticked that off the checkbox. The next thing we want to see is a red candle body close out of the zone. The same candle can fulfill both those triggers. So that same candle, the body closed out of the zone. This is the entry. This candle right here is the entry to short.
I mean,
So
I just put the next candle starting point, which is technically the same thing, right?
Okay. Oh, so that's the start. So okay, so you're saying you would enter also as soon as this candle closed? This
Yes.
is the trigger.
Which
Okay,
is the technically the starting point of the next candle where I put my arrow. So
Sure.
it's just-
Okay,
I
yeah,
think
then-
it's the same
then
thing
you're-
that we're talking.
Sure, you're correct then.
Okay, that's good.
I see. Okay, now all your entries make much more sense. So even your next one is technically correct if that's how we're looking at it. So we tested the zone. This candle body closed out of the zone, and you're entering as soon as this candle closes. So technically entering at the close of this candle, which in your case is the beginning of the next candle, sure. So you're in here. This next entry, correct also. You're entering, this zone was tested, and then a green candle body closed out of the zone. You're entering as soon as this candle closes. That's your long entry. And it seems like volume, I think this is around when volume dies. So personally, I don't take entries in here, but I'll still address your technical entries because they all look correct. This zone was broken down, so now it needs to be retested for an entry, and it was tested. This candle, this huge red candle, rejected, and as soon as it closes, that's your entry. So technically, it is here, which is in the way you interpreted it is right here. Same thing. Same thing. Correct. Test. Red candle closed out. Test. Wait. Hold on. This one might be. Yeah, this is right. So technically,
the previous one, is that right?
which
the one near the yellow.
This one?
Top. Yeah, that one.
Yeah, that's correct. That's correct.
Stancy, I think with his arrows, it should be the next candle, right? Because he's saying that the closing after the red candle, right?
Oh,
is when
for this one,
enter,
right?
right?
For this one, right?
Yes.
Yeah, for that one, I think, yeah, I drew it wrong.
Yeah. Okay, yeah, because the way you drew the arrows, I'm already a little bit off just because it's the next. So this candle tested, you need a red candle body closing out, which was this one. So the way that you're drawing the arrows, your arrow should have been
be the next one. Yes.
your arrow should be drawn on the next candle, like
Correct.
here.
Yeah.
Yeah, and then here, let's see, the green candle closes. So technically, so this is kind of where your arrow drawn, but yeah, your arrow's right. So the entry's right
That
here.
should be a long entry though. There.
Yeah, it's a long entry. As soon as this, and then you would be stopped out here. This would be a stop out.
Yeah.
Right? Because the red candle closed out of the zone, you're stopped out right here.
Yes.
And now what you want to see is the reclaim of the zone, which we saw. And then you don't just go in, you want to retest and then go, which we saw.
Yeah.
And then you saw the test, green candle closed out. And then as soon as this green candle closes, that's your entry. I think your arrow is right. It's at this price level. This is, yep, this is correct too. We saw this broken up, retest, all accomplished with this one candle, and the green candle body closed out of the zone. So you enter right here. That's correct. And then this one, the zone is tested. Red candle closes out. Your entry here is off. As you retested the zone, all we're waiting for is a red candle body to close out, which happened right here. So you would enter right here. And in your case, your arrow would be
Where is it? Can you repeat this one more time?
Yeah, so we saw this zone get tested. That's the first check mark, right? So the next thing we're looking for is a red candle body to close outside of the zone, correct?
Right. Yeah, I
So
agree.
that was accomplished here.
Gotcha. Yeah, makes sense.
Yeah, so you enter here. Technically right here you enter.
Yeah.
And then, yep, this is correct. The zone is tested. Green candle body closed out. You enter right here, which that's where your arrow is basically pointing. This price level. Yeah, your overall everything was correct except for a couple of small ones, right here and up here. Yeah, you got it. Yeah, I was just reading your chart wrong. That's why I said you were off, but you pretty much have it down.
Okay, thank you.
Yeah, no problem. Okay, I think that's it. I've recorded the whole thing, so I'll post this on the website, and I'll also post the PowerPoint deck on the website. And then when I get back from Japan, I'm going to record some of my live scalp sessions where you can see everything I'm looking at, and I'll be talking as I do the entry, and then I'll post that too, because I think that'll help even more. And then eventually, when I'm back, I'll have to mess with my screen sharing to see if I can just show everything together as I trade. But yeah, I hope this was helpful, and I hope you all have a great weekend. I'll see you.
Stanzi, can you just hold on for just 1 minute? Like on the second last entry that Sam has, would it be that I'm confused about that one, because if that's where we enter, yes, that's where we enter, yes, let's say, then we look at our very first entry, that's so why wouldn't we enter there for the that first candle which we should enter, right? Like the one that goes.
You have a better eye than me. No, good point. Okay, so this no. I'm not wrong. Sorry. So this is the right entry. The second, technically, because the price didn't do this. The price opened in the zone. I personally don't use pre-market hours. Let's say the price did this, and you're saying the entry is here. In this picture, I can't even see where the price was. Let's assume it's down here. But even if it was, I wouldn't enter on the first red body closing out of the candle. I want to see if the price is opening in the zone. Test. Because we're not starting below the zone. We're starting in the zone. So the same principle as retest. So if we start in the zone, I want to see a retest. Right? So that's why it's this second red candle as soon as this closes.
Got it. So kind of it's an assumption that actually price is coming from the higher point, like maybe out of the zone also. We can think of it more like the price actually is coming from out of the zone and just going down. So you don't know where it is going to stop. So better to let it retest and then enter.
Yeah. Even if it was starting down here. Personally, there are times I'll take this first entry, but most of the time, to be safe, because this is all low volume, I want to see action during high volume. I won't count this usually. I'll just assume the price. None of this matters. We're starting here. So therefore, I want to see a retest.
Got it.
Yeah. Yep. Okay. Cool. Well, have a great weekend.
Oh, no.
Yeah.
Stanley.
Okay.
Kenzie.
Yeah, I'm still here.
Yeah. Hey, quick question. What when you say it H like ODTE? What does that mean? I don't understand that.
Wait, sorry. Can you say that again?
Like when you hedge, when they go up and you want to hedge your account, and there's a ODTE. What is that? What is that? I'm not understand about it.
OBTE. Can you
Oh,
I think zero
ODTE.
DTE.
Zero
and zero
DTE.
DTE.
Yeah,
What?
0 DTE options.
Wait, can you type it out? Sorry. Can you type out the
She's asking about zero
ODTE.
DTE.
0 DTE? That's
Zero. Oh, that's zero.
So that means that 0 days to expiration. That means contracts that expire the same day. So when you trade those are options, by the way, not futures. But because of how options work, they have theta on them. Theta means their value will decay very quickly. So let's say you enter a 0 DT option right here, and let's say it's a put, right? Let's say you enter puts here with 0 days to expiration, and let's say the contract is worth 50 cents. If the price just did this the whole day and then it dumped down, guess what? You probably won't make money, just because time decay is going to take out. You think of it like holding a candlestick, a very fast burning candlestick. Time is taking away the value of that contract so quickly that even if the price comes down here, your contract's probably going to be worth very little. You'll lose money, even though the price went your direction. So 0 DT, I normally do not recommend trading those. They're higher risk. If you do catch it though, let's say you enter your 0 DT down here and it's worth like 30 cents and the price went down here, you might like even 5x, 10x your money. It could be worth $3 here. So you can make a lot, you can lose a lot. If you do trade them, do them very small money. I wouldn't risk a lot on them. Personally, I don't trade 0 DT. If I do it, I just do it for fun. I'll put like $50 on it, see if I can make $500 or lose it all. Does that make sense?
Yeah. Oh, okay. I just thought that we because we long right now, so we want to hedge, and then we use that. Okay, that's wrong then. Okay.
Yeah. That's a great way to hedge. Like if you're in a long swing, and if you think the price might move down on a certain day and you want to hedge your position, just slap on some 0 DTE contract, which are cheap. And then worst case, you lose that money. Best case, you just you created some buffer for your loss. So yeah, it's a good way to hedge. A lot of people do that.
I think it was somebody else in the Discord who was like showing an example of that. Oh, I forget who it was.
Yeah, no, I've seen that. So I trade in this. I'm in another small group where there's other great traders, and I do bounce ideas back. A lot of them, they utilize that too. It can definitely help a lot with saving money. It can also hurt, like if you're consistently hedging. But overall, if you're smart with it, and your account has really gotten pushed where you really need to stop some bleeding, then I think it's a good strategy. Because worst case, you lose a little bit of your money. You don't want to overly hedge with them because most of the time your hedge will go to nothing. But in a lot of cases, like if the price completely goes against where you're betting, then you can make back a lot of that money you lost. Okay. Anything else? Cool. All right. I think that's everything. I'll see you guys. I leave Monday morning, but I'll have Wi-Fi in the flight and everything. Once in Japan, my timing's going to be completely off. So the market's going to be open like 10 p.m. there to 5 a.m. or something like that. So I will do what I can. I'll definitely be updating you guys while I'm there. and I'll be sending the newsletters, and then I'll probably be mostly analyzing while you guys are asleep, but I'll still be sending everything I see. So yeah, that's pretty much it. And thanks and take care. Have a great weekend. I'll see you guys Sunday when Globex opens and Monday morning. Have a great trip and don't worry about us.